or PBS.
Energy Trust of Oregon, at home and in business, helping people to use energy efficiently and put clean, renewable energy to work.
On Nova, their allure is timeless.
This is extraordinary, unbelievable.
Their origins remain a mystery. Could this ancient fossil help solve it? Search for the first flower on Nova.
Join us tonight at 8 here on OPB.
In a divided country, America set out to train Iraqi forces.
They were loyal to Muqtada Sadr, to Abdulaziz al-Hakim, but not to the Iraqi state and not to anybody in the Green Zone.
Now, Iraq is even more divided.
Everybody had their own guys with guns. Everybody.
And less secure.
My fear is that what we're doing is equipping Iraqis for civil war.
Frontline and America at a Crossroads present Gangs of Iraq.
Join us tonight at 9 here on OPB.
Join us for OPB's Member Day at the World Forestry Center Discovery Museum, Sunday, April 29th, 10 to 4 p.m. There will be fun activities for all ages and a stunning exhibit of jungle photos by Franz Lanting. Admission for OPB members is 2 adults for 1 and kids are free. Just bring your coupon from the April Member Guide. Visit opb.org or call 1-800-241-8123 for more.
This week, it's music on Oregon Artbeat. We'll be in Central Oregon to hear how the Sunriver Music Festival nurtures young musicians in the community. We'll watch Brian Johansson as he composes a piece for the brand new Portland Symphonic Choir CD. And meet percussionist Bobby Torres. He's toured with acts from Joe Cocker to Tom Jones. Now he heads his own Latin jazz group in Portland.
Thursday night at 8 here on OPB.
OPB business partners R.V. Coons & Associates and Lamar Transit have made a contribution to OPB. Thank you.
Join us for a special behind-the-scenes look at Wildcat Haven, a rescue facility for exotic cats. Then we take to the streets for a fascinating walking history lesson of Portland and discover how the unappealing freshwater mussel is actually a great source of information on the history and health of Oregon streams.
Oregon Field Guide, Thursday night at 8:30.
Intel in with strong earnings after the bell. The chipmaker's net income jumps 19%, despite a dip in sales. We'll hear from Chief Financial Officer Andy Bryant.
Coke added life to the Dow as shares of the blue chip jump almost 3%. The soft drink giant's big move comes as its earnings top Wall Street's expectations for the 16th quarter running.
Those earnings help power stocks higher today, but all those earnings numbers may be leaving investors dazed and confused. We'll give you some guidance as we kick off our special series, Everything You Ever Wanted to Know About Earnings.
Then for most Americans, midnight tonight is the federal tax filing deadline. We've got the latest tax tips and what to do if yesterday's big storms in the Northeast kept you from getting your taxes done.
I'm Paul Kangas.
And I'm Susie Garrow. This is Nightly Business Report for Tuesday, April 17th.
Nightly Business Report is made possible by
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments. Gain from our perspective.
A.G. Edwards. Objective financial advice can help you build a better nest egg. A.G. Edwards, fully invested in our clients.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. Quarterly earnings for the tech sector kicked off after the bell today with solid earnings from Intel and IBM. Earnings at Intel, the world's biggest computer chip company, beat expectations, but revenues fell slightly. Excluding charges, Intel earned 27 cents a share in the first quarter, 5 cents higher than analyst estimates. Revenues fell 1% to $8.9 billion. Intel's been in a fierce price war with rival Advanced Micro Devices, but the company's CEO said prices, quote, held up very well in a competitive environment. Intel said today it expects gross margins to improve by the end of the year. It's also forecasting second quarter revenues of as much as $8.8 billion. Looking ahead, Intel Chief Financial Officer Andy Bryant sees business as usual.
What that means is the second quarter a little softer than the first quarter, followed by increased revenue in the second half, followed by increasing gross margins in the second half.
Also today in Beijing, Intel released plans for more than 20 new products, each aimed at making the internet, computers, and consumer electronics safer and easier to use.
Big Blue also posted solid quarterly results after the bell. IBM earnings rose 8% on a pickup in sales of software and computer services. The tech bellwether earned $1.21 a share, right in line with analyst estimates, while sales rose almost 7% to $22 billion. Among the quarter's highlights, IBM inked a $775 million contract to manage information technology at Circuit City stores. Big Blue's outlook remains unchanged from January, when it saw earnings per share growth of 10% to 12% for 2007.
There was also good news on the economic front. The government said today that gasoline prices surged 11% in March, but excluding volatile food and energy costs, consumer prices posted their smallest increase in 3 months. Jeff Yasteen reports.
Consumers had plenty of reason to grumble about gas prices last month. The cost of filling up the tank soared to the highest level since September last year and contributed greatly to the headline number reported by the Labor Department this morning, a 0.6% rise in overall March consumer prices, the biggest one-month gain since April of last year. But economists found better news in the core rate, which rose 0.1% when energy and food costs are excluded. Economists like John Burford at the International Bank of Miami say that's good news where the Federal Reserve is concerned.
The overall takeaway from today's numbers is that we have an encouraging inflation number, which says that the Fed can stay on hold. They don't have to raise rates because it looks like the 17 rate increases are working to slow things down.
But Standard & Poor's chief economist David Weiss says 1 month of numbers doesn't necessarily make a trend.
The numbers are still higher than the Fed wants. Even taking out food and energy, we're up 2.5% from where we were a year ago. The Fed wants that number to be under 2. But, to those of us who got through the 70s and 80s, 2.5 isn't all that bad.
Another bright spot was today's report on housing starts. The Commerce Department said the number of homes getting underway in March rose 0.8% to a seasonally adjusted rate of just over 1.5 million units, helped by warmer weather in much of the nation.
But it does suggest the worst is over and that we're stabilizing. And March is an important month because it's sort of the first real month. Nobody's building houses in January and February. So the fact that that seems to be stable around 1.5 million is, I think, a good sign that the market will stabilize. I still don't expect any improvement until next year.
A third report on the nation's industrial production showed a decline of 0.2% in March. That, too, was largely weather-related. Electric utilities saw reduced demand for heating because of warmer weather in much of the country. Jeff Yasteen, Nightly Business Report, Miami.
The British pound pushed through the $2 mark today for the first time in 15 years. The pound soared as the latest UK inflation data prompted speculation the Bank of England could soon boost rates. The pound has soared in value against the US dollar recently, and that's starting to impact tourism. A Big Mac sandwich at a London McDonald's now costs about $4, and a pint at a British pub is running $5 US. But tour operators in the States are benefiting by booking British shopping tours to New York City. Well, Wall Street's blue chips continued their winning ways today as those better-than-expected reports on housing starts, industrial production, and consumer prices instilled bullish confidence. Coca-Cola's strong results also helped the Dow post a 63-point gain at noon, just 3 points below its record closing high. A sluggish NASDAQ market, however, undermined the blue chips, as did caution ahead of earnings from IBM, Intel, and Yahoo, so stocks ended below the day's best levels. But the Dow Industrial Average still closed up 52.58 at 12,773.04, 13.5 points below its February 20th record high. The NASDAQ lost 1.38 to 2516.95. Standard & Poor's 500 was up 3.01, ending at 1471.48. In the bond market, the 10-year note rose 12/30 seconds to 99 and 17/30 seconds, putting the yield at 4.69%.
The U.S. Supreme Court decided 2 cases today with big business implications. In one, the justices upheld the right of companies to sue over alleged violations of federal communications law, reinforcing the regulatory authority of the FCC. The court ruled that Metrophone's telecommunications can sue Global Crossing in a dispute over who pays to connect long-distance calls made on payphones. The case involves so-called coinless calls made by using a special access code to reach a long-distance carrier. The High Court also handed a victory to the banking industry, saying the federal government alone has the right to regulate banks that operate nationwide. The justices ruled the mortgage businesses of national banks should be regulated by the Office of the Comptroller of the Currency, a federal banking regulator. The state of Michigan had sued to force one of those national banks, Wachovia, to comply with Michigan state banking laws.
Different state and federal laws and a lack of national lending standards are just 2 factors involved in the rising number of home foreclosures. But they're not the only ones. Investors are responsible as well. As Stephanie Dew reports, lawmakers and others are now scrambling to clean up the subprime lending mess.
Bank regulators today encouraged lenders to help distressed borrowers refinance into low-cost fixed-rate products. It comes as millions of subprime borrowers are facing the prospect of a spike in mortgage payments as initial teaser rates expire. FDIC Chairman Sheila Bair told the House Financial Services Committee that loan servicers and investors in mortgage-backed securities need to help restructure subprime loans.
We did not have good market discipline with investors buying a lot of these mortgages. I mean, there may be some issues with disclosure, but also it was very clear a lot of these were stated income loans. A lot of these had very high debt-to-income ratios. First and second liens, there was clear to investors that these were high risk. So I think everybody needs to share the pain now.
The chief executives of mortgage backers Fannie Mae and Freddie Mac told lawmakers they are now taking steps to help struggling borrowers. Fannie and Freddie say loans held in their portfolios can be restructured to avoid foreclosure. But Fannie Mae CEO Daniel Mudd says loans that are securitized have fewer options.
When loans are held in the form of securities, those securities are structured with a series of agreements that give, for legal reasons and accounting reasons and ownership reasons, very specified authority to the servicer to restructure, which turns out to be quite limited.
Lawmakers are considering a number of ideas to tighten lending standards and help borrowers facing foreclosure. But Freddie Mac CEO Richard Siren warned lawmakers to beware of a bailout, noting that half of all subprime borrowers are not low or moderate income and up to 10% are investors.
If we were to inappropriately, end up, quote unquote, taking care of people who should have been able to take care of themselves, it creates a terrible precedent.
Still, lawmakers are eager to find a solution. Tomorrow, Senate Banking Committee Chairman Chris Dodd will hold what he calls a home ownership preservation summit, bringing together Wall Street banks, lenders, and community groups to address the rising number of foreclosures. Stephanie Dew, Nightly Business Report, Washington.
Coca-Cola shares got a pop today, rising almost 3% as its first quarter sales and earnings bubbled higher. The soft drink giant earned 54 cents a share in the quarter, a penny ahead of analyst estimates. Sales rose 17% to just over $6 billion, boosted by strong international demand. Coke says soda sales remain flat in the U.S. as consumers steer away from sugary soft drinks in favor of healthier teas and waters. And Paul, that's why Coca-Cola hopes its purchase earlier this year of energy drink maker Fuse will ignite sales.
Well, Susie, Coke shares today were up $1.30, closing at $51.57 each. Now let's take a look at some of the other stocks in the news tonight. The most active New York Exchange issue on 23 million shares was EMC, moving up 46 cents. First quarter earnings, excluding one-time items, came in at 18 cents versus 16 cents a year ago, and that was 5 cents better than the street consensus. GE in there with a 16-cent loss. Pfizer dropped 4 cents. But Johnson & Johnson, a Dow stock, up $1.53. First quarter earnings, excluding one-time items, $1.16 a share, 11 cents above the street estimate. Halliburton, down 33 cents. Motorola, whose earnings are due out tomorrow, was up 13 cents today. Time Warner down 27 cents. Ford Motor dropped 18 cents. Micron Technology, 12-cent loss there. ExxonMobil moved up 23 cents. However, there is talk Venezuela may take over or take control of certain Orinoco Reserve oil projects in which Exxon has a stake, as do many other U.S. companies. And the really big problem is there may be no compensation whatever. Wells Fargo, the big bank, down 26 cents. First quarter earnings were higher, 66 cents up from 60 a year ago, penny above the street estimate. Revenues up 10%. And then State Street Corp up 79 cents. First quarter earnings 93 cents up from 87. That's 2 cents above the street estimate. Revenues rose 11%. And then Co-America Incorporated up $1.75. First quarter earnings $1.19 up from $1.16 a year ago, a penny above the street consensus. Dow Jones & Company up $1.13. First quarter earnings, excluding one-time items, 24 cents, up from 14 cents a year ago, 5 cents better than the street was expecting. BCE, the big Canadian phone company, up $2.03. The company said it is in talks with a group of Canadian pension funds about going private. Burlington Northern Santa Fe down $1.77. UBS Financial downgraded it from buy to neutral on a valuation basis. Fair Isaac & Company, this is the credit scoring firm, cut its second quarter earnings estimate from 48 cents down to about 36 cents and also cut its full year earnings estimates as well. The home builder is very strong today on that surprise increase in housing starts. Centex and D.R. Horton, KB Home, Lennar, and Ryland Group all in there with decent gains. Apple topped the active list on NASDAQ down $1.08, and then came Intel, which closed up 29 cents. First quarter earnings, as you heard, 5 cents above the street estimate at 27 cents. And after hours trading, the stock was up about 50 cents from this level. Cisco, 22-cent gain. Google was down $1.47. Microsoft, a 12-cent gain. Then we see Yahoo with a 48-cent closing gain. After the close, Yahoo reported first quarter earnings 10 cents, down from 11 last year and a penny below the street estimate. There was also disappointment over the company's new ad system called Panama. After hours trading, I saw that stock as low as $29.50. Research in Motion down $1.28. Amgen up 45 cents. Qualcomm 2-cent drop. Same story with Dendreon. TD America Trade Holding, the discount brokerage, down $1.56. Second quarter earnings fell to 23 cents versus 30 a year ago, penny below the street estimate. And then a huge gain for Insweb Corp. This is a firm that offers insurance online. First quarter earnings of 10 cents versus a loss of 41 cents last year. Revenues rose 6%, a big move in the stock. And those are the stocks in the news tonight. Susie?
Paul, as you mentioned, it's that time of year again. All across corporate America, companies are reporting their latest quarterly profits. So tonight we kick off a special 3-part series aimed at getting you up to speed on corporate profits. It's called Everything You Ever Wanted to Know About Earnings. Suzanne Pratt details the key items investors should look for in earnings reports.
What takes center stage on Wall Street happens 4 times a year and involves all U.S. public companies. The answer, quarterly earnings season. Corporate America's equivalent to children bringing home report cards. Earnings expert Chuck Hill has been analyzing corporate profits for decades and says the weeks when Wall Street is bombarded with numbers are paramount.
During that time, there's a great deal of focus on the earnings releases, not just to see what the results are for the current quarter, but also a lot of the companies will make some comments about what they see for the rest of the year or for the upcoming quarter.
Every 3 months, publicly traded companies are required by law to report their financial results to the Securities and Exchange Commission. A quarterly report is also presented to the public in the form of an earnings release and made available on the company website. For Wall Street, company management often hosts an earnings conference call, fielding questions from professional analysts about the news.
In our earnings press release, we announced operating results for the fourth quarter.
A webcast of that call is usually posted on the company's website.
There is nothing quite as wonderful as money. There is nothing quite as beautiful as cash.
But individual investors may find the earnings news complicated, particularly because there's no shortage of numbers to evaluate and no shortage of confusing terms. Net income, diluted earnings, and operating income are some of the possibilities. All are different measures of a company's success. Ed Nussbaum, CEO of the accounting firm Grant Thornton, says earnings per share is the one to watch.
For almost every company, the most important number is earnings per share prepared in accordance with generally accepted accounting principles, GAAP. And that needs to be disclosed, and every investor should look at that number and compare it. That's a good number to compare with other companies.
Other experts recommend focusing on operating earnings, earnings that exclude one-time charges such as restructuring costs associated with a recent merger. The view is those costs are irrelevant to future profitability. Prudential Chief Investment Strategist Ed Keon thinks investors should take their lead from analysts that follow the company, watching whichever number the analysts say is most important.
It may be frustrating to investors, but a lot of times there's really no single clear number that everybody, from the accountants to the press to the analysts, all agree is the best number to use.
Whatever earnings measure investors choose, financial experts say it's imperative that it be compared to the same number in the same quarter in the previous year. Did it grow? Did it shrink? And at what pace? Investors will also want to look at how earnings stack up against the expectations of Wall Street analysts, something a few firms now track. NYU Stern School Associate Dean Paul Brown says Thomson Financial's First Call is the most well-known of the earnings scorekeepers.
Usually the first conversation is not about the growth in a particular division. It's usually not about whether they expanded in Europe or Asia. It's usually about how much above or below the earnings are vis-a-vis the expectation established by First Call.
Experts say earnings releases also contain other crucial measures of a company's health. The revenue line, sometimes called sales, bears watching as it shows how much a company gets for goods and services. On top of that, Wall Street has become obsessed with projections a company may make about future performance, known loosely as guidance.
Guidance is an interesting term in the corporate earnings world. It basically comes down to corporate CEOs and CFOs enticing analysts and the investment community as to what they expect their earnings to be next quarter, next year for that matter.
There's no question that navigating earnings season is difficult for all investors, but experts say because there is a correlation between profits and stock performance, it's a crucial endeavor. Suzanne Pratt, Nightly Business Report, New York.
Tomorrow, these folks are at the earnings epicenter. We go inside Thomson Financial's First Call unit as our earnings series continues.
Here's a look at what's happening tomorrow. The weekly report on crude oil and gasoline inventories comes out. Also tomorrow, earnings from Dow Components, JP Morgan Chase, and United Technologies. The federal income tax filing deadline is just hours away. That is, unless you live in areas of the Northeast directly affected by the big storm on Sunday and Monday. Those taxpayers now have until midnight Thursday to file and should mark their paper returns with the words, quote, April 16th storm. With 2006 return out of the way, tonight's tax tips focus on this year's taxes and what you can do now to reduce your 2007 tax burden. Here's Kevin McCormick, editorial director of Kiplinger's Personal Finance.
With the 2006 tax deadline just hours away, it's time to start working on 2007. I want to quickly tick off a few of the many opportunities you may have in the months ahead to cut your own taxes. Take full advantage of your retirement plan at work and fund an IRA if you can. If you're 70 and a half or older, remember that this is the last year you can take your required minimum distribution from your IRA tax-free if you give it directly to charity. If you buy a home in 2007, there's a brand new, one-time only chance to deduct the cost of private mortgage insurance. If you plan a significant contribution to a charity, be sure you understand how giving appreciated securities instead of cash can be a win-win situation for both you and the charity. If you're a landlord looking to upgrade, consider whether a tax-free swap makes more sense than a taxable sale and a subsequent purchase. You know that Congress has crammed the tax law full of opportunities to save you money. It's up to you to take advantage of them. And one last point. If, like most taxpayers, you got a fat refund this spring, march into your company's payroll office tomorrow morning and fill out a new W-4 form. Reducing the amount that's withheld from your paycheck will let you get next year's tax refund in installments starting next payday. I'm Kevin McCormick.
Recapping today's market action, the Dow takes a run at a new record but falls short. The Dow added 52.5 points. It's now less than 15 points from a new high. The Nasdaq fell 1.38. To learn more about the stories in tonight's broadcast, to watch our streaming video, and to take part in our daily blog, go to Nightly Business Report on pbs.org. You can also email us at nbr@pbs.org.
And finally tonight, not only do the rich keep getting richer, but the super rich are growing in ranks. Excluding primary residences, the number of U.S. households with a net worth of over $5 million jumped 23% last year. A survey by Chicago-based consulting firm Spectrum Group shows the number of super rich households topped the 1 million mark for the first time ever in 2006. That marks a sharp contrast to a decade ago. Paul, back in 1996, just 250,000 U.S. households had a net worth of over $5 million.
Yeah, but give me those $96. They've got to be worth a lot more, especially if you're going to London.
Yes, indeed. You're absolutely right about that. That's Nightly Business Report for Tuesday, April 17th. I'm Susie Garrow. Good night, everyone, and good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbye.
Nightly Business Report is made possible by
A.G. Edwards. Objective financial advice can help make sure your nest egg is ready when retirement arrives. A.G. Edwards, fully invested in our clients.
Franklin Templeton Investments.